Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, July 21st. Well, the market's generally lower this morning, pulling back from record levels as weak earnings from industrial heavyweight General Electric weighed on the market. Shares of GE fell as much as 5.4% to their lowest level since October 2015 this morning, as the company reported a nearly 60% slump in profit, and its 2017 profit forecast came in at the low end. Attention will turn to earnings in the coming week from big tech names including Amazon, Alphabet, and Facebook. So we'll have to see what all those bring in the coming week. And of course we have the Fed announcement on the interest rate announcement on Wednesday. So now let's look at three charts that could give us some insight into the week to come. First of all, we're going to look at our chart of the S&P 500 Spider, symbol SPY. As you know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. As I looked at this chart today when I captured it late this morning, it was trading at $246.45, just off yesterday's all-time highs. All-time closing high yesterday for the SPY was $247.52. As you can imagine, being at these highs, the SPY is trading above all its major moving averages, the 20-day, the red line, the 50-day, the green line, and the 200-day moving average on this screen. Now, if we look down at the 14-day RSI, we see something here kind of interesting. The SPY, the RSI is not trading above its overbought level here. It's just up to the 70 line right here, which means according to the RSI, the SPY is not overbought here. Kind of interesting that this high here on the RSI is pretty much equal to this high, which represented the June highs on the SPY. However, this high here, again, is a higher high, but on the RSI it is an even high. So maybe internally the SPY has a tiny bit of weakness that we can't see on this screen. Of course, the MACD is trading nicely above the zero line. What I want you to note here is that we had a good bit of volume coming into May and June with all these record highs that were recorded then. In the last part of June, however, the last half of June, the market started to fall a little bit, and we saw volume move up and actually get higher on days that were definite down days. So it makes one wonder if perhaps some institutional selling was going on. Of course, institutional traders in companies like Goldman Sachs and Prudential and so forth, these guys don't ring a bell at the top. When they sell certain equities or assets, they have a way of keeping the assets fairly level as they sell off millions of shares, but it does show up finally when price begins to recede. Now, the SPY did move down to its 50-day moving average at the end of June, and then it rallied nicely, but it did not rally on high volume. So that's what makes me a little suspect here of this last move up, but we'll have to see going into the coming week. Certainly we can't argue with success as the S&P trades near its highs. Now this chart shows us the PowerShares QQQ daily chart, which is of course the ETF that tracks our NASDAQ 100. As we know, the QQQs, as we talked about a couple of weeks ago, have already created a head and shoulders, which is a top reversal pattern on this chart. At a point here, the 50-day moving average, the green line, did act as the neckline as the Qs traded below. Now this is normally a top reversal pattern, and it's normally a negative pattern unless the asset has the power to rally back up into prior resistance formed by the two shoulders and by the head. Of course, the Qs had the power to do that because they're they're really owned by the FANG company stocks. They're owned by Facebook and Alphabet and Apple and Netflix and Microsoft. So as soon as investors saw a dip in these stocks, it rallied back higher. Only thing is, much like the S&P, it rallied higher in the last couple of weeks on low volume. So that's something I'm just going to keep at my elbow, keep tucked over on the side here. Doesn't mean I'm selling everything, but it does mean that I've got just a little bit more conservativeness built into any long trades that I put into the tech index. Certainly smaller share size, certainly tight stops. So the Qs, by the way, did close at 143.70 when I captured this chart. And again, the Qs touched an all-time intraday high yesterday at $144.44. So again, we've got these earnings coming up in the coming week. We've got Alphabet Tuesday after the close, Amazon Thursday after the close, and Facebook, I believe, is Wednesday after the close. Check that one out, though. I'm going by memory here. Okay, let's look at our final chart for the day. This is a chart of the iShares U.S. Pharmaceutical ETF. I've been keeping an eye on this. Now, the top components of this ETF are Johnson & Johnson, Pfizer, Merck, Bristol Myers, Allergan, and Lilly. Now, as we see on this screen, the this symbol is wrong up here. It should be the IHE. IHE is the correct symbol. Excuse me for that typo. Okay, so the iShares Pharmaceuticals ETF, the IHE, made a low in January down here of 137, then rallied up their 50-day moving average and made a move up to the recent high you see here, the June high at 162.50. Before that, however, it was trading in a range. It was consolidating here from about between 148 and 154. So it did that for March, April, May, and June again, then had that big rally up and has since pulled back down to the 20-day moving average. That pulled back to 154, but then rallied and started up the 20-day moving average again. Now, when I captured this chart today, the IHE was trading at $158.63. And the 50-day moving average is coming in here for your information at $153.36. Also, the 200-day is coming in at about 148. Now, you can't see it on this chart, but the all-time high for the IHE, just as a note of interest, was September 2015 at $184.64. So that's, as we might think here, something to shoot for. If the market stays relatively positive through the end of this month and going into August, I believe the IHE could rally higher here. If the coming week is positive as we move into it, I may add shares of IHE to my portfolio. I'll add small size at first to make sure that the market is, it gets very hectic during the next 2 earnings weeks. So I'll add small share size here, but as always, I'm keeping my stop at the 50-day moving average, and if price comes down and closes below the 50-day moving average, then I'm out. That is my protective stop. And now on to this coming week's economic reports, but first, please join us this coming Monday, July 24th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. Now, this is an important time to consider checking out the Market Club, because if our market gets volatile, and I'm going to probably bet my duck slippers that it's going to get very volatile into August, you're going to want to kind of have somebody guiding you or holding your hand or showing you what to do. So most of all, so you don't lose money, and of course, secondly, so you make money. The Market Club is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. If you can't attend our live session, there's not a problem. The recording of our session is available to all of our members a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. As far as economic reports this coming week, existing home sales come out Monday. Tuesday we have consumer confidence. Wednesday we have new home sales, crude inventories as usual, and on Wednesday afternoon at 2 p.m. the FOMC rate decision. On Thursday we have jobless claims, as usual, durable orders and natural gas inventories, and on Friday we have the GDP and Michigan sentiment. Again, join us this coming Monday for Tony's Market Club. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.